let's first understand the matrix for agency PE. And then basically we will be able to deal with paragraph 4 and 5 far more effectively. Now, when I say a matrix for agency PE, what I mean here is that, a foreign company, let's just take an example as we have been taking, may operate through an agent in India. Let's say there are two types of agent. The first agent has 100 clients, and he's also providing services to the foreign company, which is one of its client, one of 100 actually. Agent 2 works exclusively for the foreign company, right? And when working for the foreign company, it does everything which effectively gives a representation to a customer that he's as good as the foreign company itself. Why? Because he's securing orders for them, he's signing contracts for them, and doing everything which this foreign company would have done if it were present in India. As against this, the agent otherwise only delivers goods to the customer which are identified and sales are concluded by the foreign company itself. Right? In this light, chances are that this agent is likely to be an independent agent, whereas the agent 2 might be a dependent agent. Under international laws, independent agent does not constitute a PE, whereas a dependent agent constitutes a PE of the foreign company. In this light, let's see this. An agent, if there is one, you first need to ask yourself, is he an independent agent as per Article 5, Paragraph 5? Right? We'll see what these conditions are. But if he is an independent agent, there is no PE, like I told you here. But if he is not covered by Paragraph 5, that does not mean that he automatically becomes a PE. Right? The second thing you need for is whether he is acting on behalf of the non-resident. What this means is that when this agent is operating, is he operating on behalf of the non-resident, or is he acting with him on a principal to principal basis? Which means he buys goods at $98 and sells them for $100. If the goods get damaged, he's the one who's bearing the risk and all. Then in that case, you can't say he's acting on behalf of the non-resident. But if he acts on behalf of the non-resident, right? If he's not acting, no PE. But if he acts, then you need to see whether he does any of the following three activities. Does he conclude contract on behalf of the non-resident? Is he maintaining a stock of goods for regular delivery for the non-resident? Is he securing order for the non-resident? If a person is not an independent agent and he does any of these three while acting on behalf of the non-resident, he is said to be a dependent agent, which can constitute a PE of the non-resident, and in that case, the income of the foreign company will be taxable in India. Let's look at paragraph 4 first. Notwithstanding the provision of paragraph 1 and 2, fixed place PE, inclusion in the definition of PE, where a person other than an agent of independent status to whom paragraph 5 applies. Clearly, if you are covered under paragraph 5, the question of looking whether you are not a dependent agent does not arise. Right? Is acting in a contracting state, is acting in India on behalf of an enterprise of the other contracting state, a US enterprise. So he's acting in India on behalf of a US enterprise. That enterprise shall be deemed to have a PE in the first mentioned state, which is India. If so, you are acting fine on behalf of foreign company, fine. You're not an agent of independent status, fine. But even then, you need to satisfy one of these conditions. He has and habitually exercises in the first mentioned state an authority to conclude contract on behalf of the enterprise. He has no such authority but habitually maintains in the first mentioned state a stock of goods or merchandise, he habitually secures order in the first mentioned state. We will look at these three independently in detail, but first let's see what are the characteristics of the first few lines that we saw. The first characteristics is that it overrides the fixed place PE or the inclusions in the PE, paragraph 1, paragraph 2. Second is, for the applicability of this, the agent should not be an agent of independent status as per paragraph 5. The activity should be on behalf of the foreign enterprise and not in his own capacity. If the transactions are principal to principal basis, not a sham, but actually on a principal to principal basis, he's acting on his own behalf, not on behalf of the foreign company, and therefore not a PE. Activity should be in the source state. If the agent is doing some activities outside, not covered. If all these conditions are satisfied, the PE shall be deemed to arise in India. Let's look at them one by one. So the first clause says he has and habitually exercises in the first mentioned state, which is India, an authority to conclude contract on behalf of the enterprise. So what this means is that the agent, first of all, should have the authority. Now, whether it is oral, written or oral, formal or informal, doesn't matter. He should possess the authority. And second is, mere possession is not complete. He should habitually exercise that in India. And what's the authority? To conclude contracts. Now, this does not include the word negotiate and conclude, or negotiate or conclude, right? Which means even if some bit of negotiations are done, unless the conclusion happens, right, then it will not be treated as a PE. But you need to find out a thin line between these two. If the negotiations are to such an extent that the only thing that is left is to just sign a piece of paper, then effectively he's concluded the contract, right? But if he negotiates some aspect whereby the decision or the key points or key elements of the decision are to be taken by the foreign company, you can still argue that the conclusion has been done overseas, right? Unless his activities are limited to those mentioned in paragraph 3, preparatory or auxiliary activities, which if exercised through a fixed place of business would not make that fixed place of business a PE under the provisions of that paragraph. So when you are a dependent agent, if you are concluding contracts which are related to activities which are preparatory or auxiliary in character, in that case it will not be treated as a PE. But otherwise, if you possess as well as you habitually use your authority to conclude contract on behalf of the foreign enterprise, you'll be treated as having a PE in India. Let's see some of the characteristics of this particular clause before we move to clause B and clause C. So the use of the authority envisages 2 points. You should have the authority and you should habitually exercise. If you don't have or if you don't use it, it's not relevant. In what right should the authority be exercised? It should be exercised for concluding contracts on behalf of the foreign enterprise. What if the activities are covered under paragraph 3, preparatory or auxiliary? They shall not result into a PE. Now, one thing which also needs to be noted here is that the conclusion of contract should be in relation to some revenue generating activities, right? If you are just trying to do some pre-sales activity, right, some liaising with the client, that may not result necessarily into an authority to conclude contract. Secondly, the use of the word habitually indicates that when the exercise is done, it should be systematic. It should be continuous. I mean, not say that it has to be every day, but maybe during every interval, it should be done in line with the nature of the business of the foreign enterprise. He has no such authority, but habitually maintains in the first mentioned state. There's no authority to conclude contract, but he maintains in India a stock of goods or merchandise from which he regularly delivers. It's not an occasional delivery. If it's an occasional delivery, it would be covered under preparatory or auxiliary activities. right? Goods or merchandise on behalf of the enterprise, and some additional activities. Not only should the delivery be regular, but there should be some additional activities conducted in the state, in India, on behalf of the enterprise which have contributed to the sale of goods or merchandise. Not only should the activity of delivery be there, but some sales activity or some other activity which results in the conclusion or the sale of goods should be carried out by the agent. The second piece may be missing in some of the treaties, right? And you need to watch out for this. So what should be maintained? Stock of goods or merchandise. The delivery should be regular. In whose name should the goods be delivered? On behalf of the foreign company. And is only maintaining a stock of goods sufficient? In many treaties, yes. But in the present case, there have to be some additional activities in the source state on behalf of the foreign enterprise, which should contribute to the sales. So what this does is, it actually restricts the scope of a PE. Because if you are just delivering on a regular basis, but do not do anything else in the source state, that may actually take you out of this clause. And then the last one, he habitually secures order in the first mentioned state wholly or almost wholly for the enterprise. Now, when you say secure order, while in this particular treaty, it is said that it has to be for the enterprise. In some treaty, you may find that the reference is to enterprise plus other companies which might be under common control or which are controlled by this enterprise, or maybe a parent of this enterprise, right? The order securing has to be done on a habitual basis, systematic basis, not a one-off transaction, right? Wholly or almost wholly has also been interpreted in several decisions. And what they have said is that it should be something like either 100% when you talk about wholly, and when you talk about almost wholly, it should be at least 90% or more. Unless this is the case, you cannot say that the agent is securing order wholly or almost wholly for the enterprise. Now, when you say wholly or almost wholly, what is going to happen? Suppose there's an agent, okay? He does two businesses, B1 and B2. B2 he is doing on behalf of the foreign company, and he's 100% dependent on B2 for this. B1 he does for a lot of local customer and maybe some foreign companies as well. When you talk about securing orders, this has to be seen vis-a-vis the activity of the agent which is being carried out for the non-resident. You do not need to see whether the foreign company has only one agent. What you need to see is, for the activity that we are considering, how much is the dependence of this agent on the foreign company. If this dependence is 100% or 90 plus, it is construed that this agent is a PE, even though he may have certain separate businesses, right? In case of securing order, one other thing which is relevant is, how does the agent conducts himself, right? If he represents that if I accept an order, consider it as accepted by the foreign company, that is something which is referred to as securing order, right? If the customer believes, due to the representation of this agent, that if he agrees, the contract is done, that's where it is said that the agent is securing orders for the foreign parent in India, right?